Hello everyone, welcome to Cognition Curve. Let's get straight into it. Artificial intelligence is revolutionizing every industry in the world. Companies are spending billions of dollars annually to develop the most advanced AI models, and the schedule for innovation is moving faster than anyone could have predicted. But this also makes AI infrastructure one of the biggest challenges of our generation. So today's episode breaks down everything you need to know about OpenAI's unprecedented Stargate project, a $500 billion bet on AI compute. I really enjoyed researching this one, and I hope you enjoy it too. As always, let me know in the comments. The tech world's eye is currently on artificial intelligence. The models require billions of parameters, run on thousands of specialized chips, and can cost up to $100 million just to train once. ChatGPT 4. Companies like OpenAI, Google, and Microsoft employ thousands of people and are spending billions annually to build the most powerful AI systems. Hundreds of companies are racing to adopt the technology, and nearly every Fortune 500 company is figuring out how to implement it. But to create more advanced AI models and support higher demand, AI infrastructure needs to scale, and that doesn't come cheaply. For example, announced in January 2025, OpenAI's Stargate project is an unprecedented infrastructure bet, a new venture planning to invest up to $500 billion over 4 years to build cutting-edge AI data centers. The initial commitment is $100 billion to be deployed immediately, fueling construction of Stargate 1, a flagship AI supercomputing campus in Texas. These facilities will be used exclusively by OpenAI to train and serve advanced AI models, essentially becoming the AI factories for the next generation of generative AI products. It's important to understand how massive and energy demanding these projects are. Stargate 1 alone is estimated to consume the same amount of power as Austin, Texas. With backing from tech and finance giants, Stargate represents one of the largest private capital projects ever attempted. But how exactly is it being financed? How does it compare to competitors? Here's everything you need to know about OpenAI's $500 billion bet on AI compute. All right, everyone, quick word from today's sponsor, Fall AI. Fall AI is the fastest serverless platform for AI inference. Whether you're a developer building the next big app or a business looking to integrate AI into your workflow, Fall AI gives you access to the latest AI models without the headache of managing infrastructure. Here's what makes them special. Sub-second response times, support for every major AI model you can think of, from image generation to language models, and you only pay for what you use. No massive upfront costs, no server management, just pure AI power at your fingertips. If you're curious about what AI can do for your project or business, head over to Fall AI, that's FAL.ai, and see how fast AI can be when it's built right. All right, let's get back to the episode. First, it's important to understand how Stargate is being financed. All of this compute infrastructure requires enormous upfront capital, and OpenAI has assembled an unlikely alliance of tech and investment titans. Initial equity investors include SoftBank, OpenAI itself, enterprise cloud provider Oracle, and Abu Dhabi's MGX, an AI-focused fund backed by sovereign fund Mubadala and G42. SoftBank and OpenAI are the lead partners. SoftBank shoulders financial responsibility while OpenAI handles operational control, with SoftBank's Masayoshi Son serving as Stargate's chairman. According to reports, OpenAI and SoftBank each committed about $19 billion in equity to Stargate's first phase, giving OpenAI roughly 40% stake. Oracle and MGX are contributing a combined $7 billion in equity, leveraging MGX's deep sovereign capital. The fund manages around $100 billion for AI investment alone. This still leaves a huge gap though, roughly $55 billion just to reach the initial $100 billion deployment, which will be filled by debt financing and external capital. Debt and private credit are playing a major role. Much of Stargate's financing is expected to come via large debt raises, potentially even through publicly traded bonds or infrastructure debt vehicles. Already, the Texas flagship campus, Stargate 1 and Abilene, is being financed through creative structures. OpenAI's development partner, Crusoe, entered a $3.4 billion joint venture with private credit firm Blue Owl Capital to fund construction, and JP Morgan is providing a $2.3 billion construction loan. In other words, traditional infrastructure investors and banks are underwriting a significant portion of the upfront costs, likely secured by the data center's assets and future cash flows. This blend of strategic equity and large-scale debt mirrors a project finance style model more common in energy or real estate than in tech, a testament to the industrial scale of AI compute now being built. We'd be remiss to not mention Microsoft. Microsoft's role in financing is notably indirect. They're a major shareholder and cloud partner of OpenAI, but not an equity investor in Stargate, unlike SoftBank or Oracle. Early plans in 2024 did consider Microsoft financing a $100 billion OpenAI supercomputer project, but the final Stargate venture pivoted to new partners and a much larger scale. Microsoft instead contributes via its existing $10 billion plus investment in OpenAI by serving as a key technology partner. Azure remains an important cloud for OpenAI, and Microsoft provides cloud credits that effectively subsidize some compute. However, the launch of Stargate loosens OpenAI's earlier exclusive reliance on Azure, freeing OpenAI to build and use its own or partner-operated data centers going forward. So in summary, SoftBank's capital, MGX's sovereign wealth, Oracle's cloud expertise, and OpenAI's own funds form the equity base, while private credit firms like Blue Owl and banks like JP Morgan are lining up debt, all buoyed by confidence in OpenAI's future cash flows. While the $500 billion vision seems almost unimaginable, Stargate 1 in Abilene, Texas is very real and under construction today. This is the proving ground for OpenAI's compute ambitions. Housed on 8,000 acres of clean compute campus on land developed by energy startup Lancium, the site will host 8 massive data center buildings by its second phase, totaling around 4 million square feet of space and consuming up to 1.2 gigawatts of power. For context, again, 1.2 gigawatts of power is comparable to the power demand of San Jose, California, or Austin, Texas. Construction began in mid-2024. The first phase, consisting of 2 buildings totaling about 980,000 square feet with 200 plus megawatts of capacity, is scheduled to be online by the first half of 2025. Those initial 2 buildings will be filled with an estimated 100,000 NVIDIA GPUs, that's 50,000 per building, to support OpenAI's workloads. Now, phase 2, already underway as of March 2025, adds 6 more buildings by mid-2026, scaling the campus to its full 1.2 gigawatt capacity. Financing for the Texas project is equally large-scale and structured like an infrastructure project. Crusoe Energy, the developer, operator, and partner, are investing an estimated $3.5 billion in the Abilene campus initially. Oracle is leasing at least 2 of the first buildings at a cost of about $1.1 billion as an anchor tenant, effectively securing capacity for OpenAI via Oracle's cloud. To fund construction, Crusoe formed a joint venture with Blue Owl to inject $3.4 billion into the project, and JP Morgan Chase provided a further $2.3 billion in construction debt. This implies a leveraged, heavy capital stack, with debt financing likely covering well over half of the upfront costs, while equity covering the rest. Additionally, 85% property tax abatement from local authorities sweetens the deal by vastly reducing ongoing tax expenses. In essence, Stargate 1's funding model combines tenant-backed revenue streams, Oracle's involvement, private credit capital, and public tax incentives, ensuring the risk is spread and immediate out-of-pocket costs for OpenAI and Stargate are minimized. Despite its scale, Stargate 1 will have surprisingly few direct jobs once operational. Documents indicate only 57 full-time employees will run the entire campus, with an average salary of about $57,000. By comparison, thousands of construction workers are employed during the build phase. This starkly low headcount reflects how highly automated and energy intensive these AI compute factories are, mostly racks of GPUs humming along with minimal human intervention. It also highlights why localities demand investment commitments and indirect economic benefits in return for tax breaks, since permanent employment is not so large. So let's break this down a little bit further on how the massive project is being financed, starting with JP Morgan's $2.3 billion construction loan. JP Morgan Chase is providing this loan to fund the development of the Abilene Data Center campus. It was arranged by Newmark Group as advisor and is secured by the project assets and lease contracts. The financing supports 206 megawatt, 998,000 square foot build-to-suit data center facility built for high-density AI computing. The collateral includes the physical data center and the Oracle lease, effectively a project finance style loan backed by the asset's revenues. While specific interest rates haven't been publicly disclosed, market observers note that demand for data center loans is so strong that such projects command premium terms with lenders competing aggressively. This suggests that the loan is likely carries a relatively low spread over the benchmark rate given the investment grade tenant and long-term lease. The loan is expected to be interest only during construction and possibly through initial operations, with a maturity structure to accommodate project completion and stabilization. As is customary, the financing likely includes covenants for on-time completion and budget adherence. The loan will be repaid from a combination of sources. Initial interest during construction may be capitalized or paid by the joint venture's equity, and once the data center is operational, Oracle's lease payments will service the debt. Given the long-term nature of the lease, the financing could be taken out by permanent debt after construction or even securitized. On the equity side, the project is backed by a $3.4 billion joint venture formed in October 2024 by Blue Owl Capital, Crusoe Energy Systems, and Primary Digital Infrastructure. This joint venture provides the equity capital, roughly $1.1 billion, assuming the $2.3 billion loan covers about 2/3 of the total project budget. According to the official announcement, under the terms of the fully funded forward takeout, funds managed by Blue Owl's real estate platform and Primary Digital Infrastructure will jointly sponsor the 206 megawatt data center. In other words, Blue Owl Capital's real estate investment platform, which specializes in long-term asset-backed financing, is the main equity investor in this project, alongside Primary, a data center-focused investment firm. Blue Owl's role is pivotal. It brought deep pockets and structuring expertise to ensure the project's funding was in place from day one. Blue Owl and Primary Digital's equity likely earns returns through long-term lease payments from Oracle. The JV structure means Blue Owl owns the asset, with Crusoe as the operator and Oracle as the tenant, very much akin to a sale-leaseback or build-to-suit real estate investment. This financing structure cleverly allocates risk to the parties best able to bear it. Construction and execution risk lies with Crusoe as developer and indirectly Blue Owl as forward investor rather than OpenAI or Oracle. Market lease-up risk is minimal because of the pre-lease to Oracle. Financing risk is largely shouldered by JP Morgan in the short term. Operational risk on Crusoe as the operator and Oracle OpenAI as users, but Blue Owl's return is mostly passive, like a landlord collecting rent once the center is online. For capital of this magnitude, investors are betting on extraordinary returns driven by surging AI demand. OpenAI's internal projections envision explosive growth in revenue, suggesting Stargate's capacity will be highly utilized. According to investor briefings reported in April 2025, OpenAI expects its annual revenue to grow from around $3.7 billion in 2024 to $125 billion by 2029, and further to $174 billion by 2030. This approximately 30x revenue jump in 5 years is predicated on new AI products, essentially AI agent services, generating massive usage. The return on investment for Stargate thus hinges on OpenAI achieving those scale economics, filling these data centers with revenue-generating workloads at very high utilization rates by the late 2020s. On a more granular level, Stargate's returns are indirect. It enables OpenAI to offer AI services at a massive scale and presumably lower unit costs than if renting all capacity from other cloud providers. For instance, each 1 gigawatt of AI compute could host many tens of thousands of GPU systems that process user queries, train models, or fine-tune AI agents. The utilization rate of these costly chips is critical. Idle GPUs produce no revenue but still incur capital costs. OpenAI will need to keep its AI factories as busy as possible, running model training cycles, serving millions of chat and agent interactions, and powering new AI-driven products around the clock. The company's revenue model is shifting towards not just API calls and subscriptions, but potentially advertising and transaction cuts via AI agents. This implies a future where billions of users' tasks are executed on OpenAI's compute. In essence, the ROI calculation boils down to the following. Will the AI services enabled by Stargate generate enough cash to service its financing and yield profits? Given the lofty $125 billion revenue target by 2029, the implied answer is yes. If OpenAI's AI agent vision materializes, each Stargate facility could support billions in annual revenue once fully ramped. But that outcome is far from guaranteed, making this one of the boldest infrastructure wagers in tech history. OpenAI's Stargate is unprecedented in scale, but it's not the only effort to build hyperscale AI infrastructure. So let's look at some of the competition. CoreWeave has emerged from a GPU cloud startup to a major AI host. They run 32 data center sites with approximately 250,000 NVIDIA GPUs by the end of 2024, after raising more than $12 billion in equity and debt. And in 2024 and 25, they signed an $11.9 billion 5-year deal to supply OpenAI, which also received approximately $350 million of the IPO shares as part of the contract. CoreWeave's multi-tenant rentals spread utilization risk across customers, including Microsoft, Meta, Anthropic, and others, whereas Stargate is single tenant for OpenAI. And values vest of that flexibility, and CoreWeave listed at $23 billion market share on a $1.9 billion revenue in 2024. Then there's xAI, Elon Musk's Colossus compute fortress. Phase 1 of Colossus went live in May 2025 with approximately 200,000 H100 GPUs inside a converted Electrolux plant in Memphis. It draws 150 megawatts from TVA plus 150 megawatts of Tesla Megapack battery backups. Phase 2 will double down power to 300 megawatts before year end. The Memphis Chamber and xAI roadmap call for 1 million GPUs by 2027, which would push site power towards the gigawatt scale. Unlike Stargate's project finance model, Colossus is being self-funded by equity. xAI closed a $6 billion Series C in December 2024, lifting its valuation past $40 billion and earmarking most of that cash for infrastructure. The key contrast, Stargate spreads risk through Oracle's long-term triple net lease, plus Blue Owl and JP Morgan's project financing, and xAI concentrates risk on Musk's balance sheet for speed and autonomy. Stargate aims for 400,000 GPUs and 1.2 gigawatts by mid-2026, but Colossus is already halfway there on GPUs with less power headroom, and is racing towards a far larger 1 million GPU footprint if funding and grid capacity materialize. We can't forget the hyperscalers like AWS, Google, and Azure. These cloud titans are building their own AI megaplexes. The big three spend 30 to 40 billion plus in annual capital expenditure across dozens of regions each year. Google's TPU v4 pods deliver more than 1 exaflop per pod. AWS fields a massive GPU fleet. Microsoft Azure continues expanding its OpenAI dedicated clusters, even as Stargate shifts some demand off cloud. Their advantage is global reach and multi-tenant economics, but dedicated AI clients like OpenAI or xAI may prefer bespoke superclusters for cost and control. Other specialized players to mention include Cerebras and Lambda Labs, who are assembling AI-specific centers using custom silicon. Infrastructure REITs like Digital Reality and Equinix are carving out liquid-cooled, high-density hulls, and sovereign programs like France's 109 billion euro AIDC initiative echoes OpenAI's Stargate for countries. None match Stargate or Colossus yet, but the trend is clear. Compute-first development is the new arms race, blurring the lines between real estate finance and venture growth. So let's wrap this up. OpenAI's Stargate initiative highlights the feedback loop between capital investment, computing power, and AI product revenue. By injecting staggering amounts of capital, OpenAI aims to unlock unprecedented compute capacity. That compute, in theory, will yield more powerful AI models and services. Those services could dominate markets and generate vast revenues, which then justifies the initial investment and fund further innovation. It is a bold attempt to accelerate the AI flywheel by brute force, betting that more chips and compute can dramatically speed up progress and market capture. If it works, Stargate won't just pay for itself, it will reinforce OpenAI's leadership, producing profits that can be funneled into developing even larger models or new ventures. In the near term, all eyes will be on Stargate 1 in Texas. Can it come online as planned, and will OpenAI put it to good use, training GPT-5 or even GPT-6, serving 1 billion users? The project's execution and early utilization will inform whether additional sites, the remaining Stargate 2 through to Stargate 20, perhaps, move forward rapidly. The broader industry will also learn from this experiment. If OpenAI demonstrates a successful model of infrastructure-focused capital deployment yielding market dominance, others will emulate it, creating a new paradigm in tech investing. If it stumbles, however, it may prove that throwing money and hardware at the problem is not a guarantee of success. All right, everyone, that is it for today. I hope you enjoyed this breakdown of OpenAI's $500 billion Stargate project. And as always, I appreciate you listening. Make sure you subscribe to the podcast or YouTube channel so that you don't miss any episodes going forward. And if you're looking for more detailed content and clips, check out the newsletter or follow me on Twitter at Ralph Maker. Hope you have a great day. I'll see you all again soon.